Creamer Media is interviewing Jan Nelson, the CEO of Copper 360, for Mining Weekly's Listing of the Year feature. Hi, Jan. I'd like to kick off by putting this question to you. Copper 360 is setting out to double investors' money in 2024. What will make that possible?
Hi, Martin. Yes, a few things. I think the first thing is that we've just spent 40 million rand on upgrading our SXEW plant, and where it would do about 1,200 tons of copper next year, it's now going to double that production. It's going to do about 2,200 tons of production. So I think that will add to the increased production to a better valuation. And then the conch plant comes online, and that adds about another 450 tons of copper production. And then Rietberg mine starts to feed this conch plant. So I think, if you just look in terms of revenue, we're going to jump to about almost 60 to 80 million rands of revenue in the next 2 months from a low base of, let's call it 10 million rand. And I think that's going to make that difference. That more than justifies doubling the share price. I actually think I'm quite safe. I think it'll be more, but let me be conservative. So I think all of those factors will play a role in driving that share price up, because with that comes cash flow, an increased dividend that we'll pay out. And I think that will get people to invest more into the company.
And is Copper 360 still projected to remain a low-cost, low-capital business characterized by simplicity and reliability and organic growth?
Absolutely, Martin. We have decided to build our plants in one locality in Ababib. So there's a central processing facility that is quite well coordinated and managed. That keeps it very simple. Rietberg is able to produce double the amount of rock that the plants need. So from that perspective, we've de-risked. There's reliability. We've also designed the new plant, and with the additions that we've done to the SXEW, that we've built, as they say in the airplane industry, we've built double redundancies in everywhere. So for example, on the SXEW, we've now installed a mill that can do 40 tons per hour of rock, where the requirement to meet target is only 20 tons. So we've done those things to include double redundancy, which gives you reliability. And from that perspective, I think we're well set to achieve what you've asked. There's reliability, there'll be consistency. And in terms of capital, we are going to turn about 60 to 80 million rand in revenue. And the capital that we would have applied is in the order of about 250 million. So you can see it's extremely low capital. And then our all-in sustaining costs is less than $4,550 a ton of copper. And with the copper price now hovering at close to $8,000 a ton, you can see there's a very nice, healthy margin because of the low cost. And that will continue because, we've got surface operations and the mine is pre-developed. So from that perspective, we can keep our costs down.
And is Copper 360 still on track to achieve that revenue that was stated of 1.2 billion a year and 500 million to 550 million of net free cash flow?
Martin, even with the reduced copper price that we've refactored in, we're still on line to deliver those metrics next year.
And what are Copper 360's plans to maximize operating volumes in a sustainable manner in the short and medium and long term?
I think in the short term, we've now drilled and defined several ore bodies on surface, and they give us the ability to push the grade at certain times, which we will do. So in the short term, we've got the flex, and we've got big stockpiles lying in front of the plants at the moment. So we have the ability to push the grade in the short term, and that will give us a nice boost in earnings. But in the medium to long term, we are looking at what we call our 4 nines plan. And the technical team is now working on the process of beneficiation. We want to build a roaster, and we want to build a very small smelter where we can beneficiate and make our own copper wire and pipe. And with that, we'll also start generating acid, which means that the money we now pay for acid will go away. And with the additional acid, we can then use that to heap leach lower grade deposits, which will again add to our volume increase. So there's a very nice growth story here that's organic and low cost. So that will be the plan to increase our production. But in the process of doing it, keeping the capital, sustainable, that we can manage it, and that we keep the cost profile exactly where it is.
And Copper 360's resources at Rietberg alone have turned out to be 220% greater than originally thought. Where will the funding come from to turn Rietberg and Copper 360's other many assets to account?
Look, the funding is already in place for Rietberg. So, at the moment, we're busy buying all the equipment we need to put the mine into production. So that's been financed. For the rest of the deposits, we can easily finance it from cash flow. We've got a healthy margin even after we pay the dividend. But we've also got no debt, Martin. So we will leverage the balance sheet to get some debt to finance certain aspects. But in the way that we've planned it, it's systematic in certain steps, and we could, if we wanted to, handle it all from the cash that we will generate.
And does Copper 360 also have the funding to build the slag and sulfide processing plant at Nababip, where your solvent extraction, electrowinning SX-EW plant is already operative?
Absolutely. And the reason that we can do it, Martin, is because we've got our own in-house design and engineering capability. The skunk plant that we are putting into production, 80% of it we've built ourselves. There's certain things like the molds and the float cell mechanisms that we order. But we have the ability to design and to build our own plants. Now, that not only cuts the lead time in terms of getting the plant to production, but the fact that we can build it ourselves significantly reduces the costs. And there's no risk in terms of it not technically being as good as if we've got a contractor to build it. It's just we've got those skill sets, we've got the engineering shops, we've now built the second plant. We've had it independently signed off, and everybody is very comfortable, and these plants work. So that gives us the ability to do it from cash flow. Where, I think if you look at the concentrate plant we've just built for about 145 million rand, anywhere else you'd pay about 4 times that. You'd probably pay 400 million to build it if you had to do it outside of the company. And that gives us the ability to fund it from cash flow. And I mean, we, for a small junior, have an exceptionally well-qualified and big project team. It's one of our strengths that we've established over the last 2 years. And that gives us this advantage to do it in-house and fund it without a big problem.
And Copper 360 has been considering deploying a locally developed technology, an alternative to dense media separation, DMS technology, to increase grade prior to recovery. Has that technology proved itself to an extent where it can be implemented?
Martin, I don't want to say too much about that because I don't want to steal the thunder. The real person who's been driving this is Jean Holm, the CEO of ICAPA, who is a 12% shareholder in us. And he's applied his technology that he uses in the diamond industry in terms of treating the ore before it goes into the mill. And it's something that us copper miners haven't paid a lot of attention to. And he's built a specialized plant that we've been testing, and the results look very, very good. It will be a world first. But as I said, the credit they must go to Jean and ICAPA and their team. But again, that talks to the strategic partnership that we formed with them as an investor. They're not just an investor passively putting money in because they know they're going to at least double their returns, as I said, but they are also strategically involved. They are also miners. And what they bring is the skill set of, in the diamond industry, sorting out your rock piles before it goes into the mill, because that's important. And helping us take that technology and applying it in the copper space where it adds additional benefit. So we'll still talk about that in the next month or two, but the results look very encouraging.
And what new energy generation has Copper 360 implemented to date? And what are your energy plans for the future?
Martin, we will announce soon that we have signed an agreement with one of the major energy companies in the world that is busy looking at establishing a 10 megawatt solar plant for us. So that's on the cards, and we'll talk about that in the next month or two as well. And then we are still pursuing our ambition of a wind farm over the next 3 years so that we can generate about 30 to 50 meg of our own power over the next 5 years, and then be totally independent of Eskom. Now, we don't want to be totally independent of Eskom because Eskom still supplies the cheapest energy that you can get. But we want that as backup for if there is a shortage. And we'll know it still take Eskom a few years to rectify the backlog that they've got. And I think they've made fantastic strides over the last 6 months. Load shedding has reduced dramatically. But we do know that they've also got a journey. And as part of that journey, we are just we will just have backup energy. In any case, we've got quite big growth plans. We want to put a smelter in place. We want to put a roaster in place, all energy hungry plants. So having the extra energy is good. And if we have surplus energy, our view is to supply it to the municipality and the communities free of charge. So then from that perspective, if there is too much, there's a great advantage to the community and the municipality in the area.
And on the day of the listing, Copper 360, you described the JSE as being a fantastic capital market. Are you still of that view?
If you look at us, we've had nice news flow out. We don't trade big volumes, but we've had significant volumes for our size trading. Then the share price is down to 350, then it's up to 450, and there's trading happening the whole time. And I'm excited about that, because I think as we expand and more people invest, and we've got some plans to pull some more investors in and make it even more attractive, for people to come in. So, for example, our financial director is looking at a type of a reduction in the dividend, but making it a royalty for all shareholders that could potentially pay out monthly or quarterly. And we still have to talk to the JSE about that, and we can list that instrument so that shareholders can get a much quicker return based on what we do. So we're working on things like that. But I've seen that the volumes trade well. We also are able to attract investors that are not able to invest in you if you are not listed. So just that alone, is good reason to be listed, because you open up a different space. But I think it also gives you visibility in the market. So I've experienced the JSE as just fantastic. And I don't know why people complain about the JSE or South Africa. If you're invested here and you want to attract investors, why would you talk badly about South Africa and the JSE? Because I'm not going to invest in you if you talk badly about the place where you invested. I just think sometimes that people want to blame the JSE for their own lack of not achieving certain metrics and performing. And so the easy thing is to always say, but the JSE is bad. Now, everybody talks about the delistings, but I think there's quite a few companies that are going to start listing again. And I've seen similar delistings and listings on other exchanges. We've been on Toronto, we've been on AIM. We can raise all the money we need in Joburg on the Johannesburg Stock Exchange. So I find it an extremely attractive place to be. And, you're in the hub of one of the biggest exchanges in Africa. And definitely the JSE, in terms of them supporting you, has been absolutely fantastic. On the TSX, and not to bad them, if you have a problem there, there's nobody you can talk to. They just say those are the rules and we're not prepared to talk or see if we can accommodate you. I can pick the phone up now and talk to anybody in the JSE, and they're prepared to help. And we trade well, and we find it an exciting, good platform.
Fantastic. And how many of the 629.7 million Copper 360 shares listed under the symbol of CPR have been taken up by the market?
About 30%.
And what steps can be taken to make it easier for retail investors to buy Copper 360 shares?
Martin, I think we've got some plans, as I've mentioned, in terms of a type of a royalty to attract more people, obviously create more visibility. We're going to have to free up a little bit more shares that are in the hands of the owners. And then, I think one of the things we will engage government is to perhaps give some better tax breaks or incentives for people who invest in junior miners. But that's a discussion we'll have with government. But that could, that's worked well in Canada. And I think that can work well here as well.
And all of Copper 360's data flowing across the JSE's virtual trading floor, as I watched it, is referenced by the three letters CPR. How can these three letters be highlighted to the fullest possible extent to alert liquid capital markets to what Copper 360 and South Africa can return to investors?
Martin, if you have to say those three letters, they say copper, and that's the bottom line.
And a few days before Copper 360 listed on the JSE's LTX on April 21, the company raised 152.5 million at an oversubscription rate of 1.3 times. Would Copper 360 have been able to raise that amount of money had it not been committed to being listed on the JSE?
Martin, we wouldn't have raised all of it. Raising money, there's a lot of capital available in South Africa. It's quite competitive, and it's not easy to raise capital. And the one thing is that you must have different sources of where you pull your capital. So we wouldn't have raised all the capital. We probably would have raised about, I would think, about 65 or 70% of the capital privately because ICAPA came in. But that other portion we only raised because the institutions came in and they want you to be listed, you know. And although that might seem a smaller amount, if you want to build something and you only have 70% of the money, you're not there. So that other 30% is critical. And it's again, why would you close markets down? And, you know, the cost of being listed on the JSE is negligible. And I can tell you the admin around it is also negligible. If you behave like a proper company, then it doesn't cost you a lot of money and then you don't have a lot of problems. And so the cost of being listed is negligible compared to that other market, if I can call it that, or institutions or people that will invest based on the fact that you have to be listed. So why close another capital market down?
And was the listing essential also around the production of Copper 360 to get that £650 of copper a month or just £8,000 of copper a year? Was the listing essential, do you think?
Look, it's essential, more so towards the target we're going for next year, because, you know, we need to build a plant, we need to buy mining equipment. And as I've said, you know, 30% of the capital only came in because we were able to be listed. So again, you can imagine that if we had 30% capital short, we would have cut down and we would have had to scale down and we would have produced less copper. So I think it was I wouldn't say that it was critical that we couldn't still carry on with the business. We would have been smaller. But I think it gave us the critical mass. And the critical mass gives us a competitive advantage because when you have all the capital, you can move faster. And by moving faster, there's more opportunities. Whereas if your capital gets cut back, you know, your opportunity starts disappearing. And I think there's a greater risk to the business if it's not a certain size. You know, juniors have to be a certain size to start becoming viable. Otherwise, you keep on coming back to the market for more money. And so if you can start well, if you can start the race well, you know, you're well ahead of the rest of your competition. And the listing enabled that.
And does Copper 360 still have enough funding to ramp up to that 16,000 tons a year that you stated?
Yes, Martin, we will take some debt for additional capital that we require. But again, like I said, we'll leverage the balance sheet. So there's absolutely minimal or no impact for the retail shareholders because we've got no debt. So yes, we've got enough money, but we'll take a little bit more to accelerate a few things.
And going forward, how can Copper 360 ensure that its dozen mines, 60 exploration assets, and expanding plants supply copper optimally to a copper short world?
Martin, I think it's by putting these plants and this business into production as quickly as we have, having a very good team that can do it. So I think that's the bottom line. You know, we've now built the plants. We now have to start making copper from it, and I think we're well placed to do it. So it's really now getting down to the business of breaking the rock and bringing it out of the mine and putting it through the plants, and that's what the focus will now be for the next 12 months.
And the Copper 360 School of Mines at Concordia has attracted a lot of international attention. What are the chances of other mining companies joining forces with Copper 360 to provide the necessary skills to meet the expected demand in the Northern Cape?
Martin, I think there's a good chance. We've been speaking to some, and some companies have approached us. You know, we're talking to all the tertiary institutions to bolster this up, and there's very good will from everybody. So I think we will see the School of Mining expand next year with much more support from tertiary institutions and some other mining companies. And as I've said to you, I think it's critical that we get those skill sets developed again in mining and make mining cool, show people that there's a fantastic future in terms of mining, and that mining is critical to creating a better world where, on the basis that we obviously are responsible miners and we do it on a sustainable basis. But there's no ways you're going to create this new world without mining. But I think how we approach mining has to change, and we need those young people with different views and clever ideas to come and study engineering and chemical engineering and geology and all those disciplines to help us integrate mining into the new world where mining is not a swear word, but something that you are proud to be part of and that you actually would rather go and study mining than go and do anything else. And I think the school does that. It creates that excitement, creates the platform. We're not trying to replace the tertiary institutions, but it creates that gap in between school and the universities where we can add a lot of skill sets, get people involved, get them excited, and help them participate in the economy, you know.
And what is the level of global copper demand on the horizon? And by how much is projected global supply failing to meet that demand?
Martin, in the long term, over the next 15 to 20 years, as you know, there's a big deficit. You know, there just isn't enough copper. There's about a 30% deficit in terms of what the world needs. In the short term, you know, it varies. At the moment, people say it's almost imbalanced. There's just enough. And then at times there isn't enough. But it seems to me that if you look at South Africa, you know, South Africa imports most of its copper. It's only the platinum mines that really, 4 of them produce byproduct, and it's insignificant amounts of copper. So in South Africa, we haven't got enough copper. We've just been approached by a number of companies to sign offtake agreements with us. And if you look at the terms that they're offering you, there must be a shortage of copper in the short term as well, you know, because the terms we see are terms that are fantastic. And that just tells me that there isn't enough copper. Now, we're not a big producer in terms of the world, in terms of copper. So all the copper we have get gobbled up very quickly. And in South Africa, you know, we've got people that have approached us. You know, we've got SA Metals that buy most of our copper plate, and that's all domestic. So from that perspective, I see a shortage of copper. There might be global balance at the moment for the next year or so, as the analysts, you know, say, but, you know, the analysts also change their view every month. You know, every month they've got a different view on, then it's a shortage, then it isn't, you know. Long term, the fundamentals are good. I think in the short term, in South Africa and being one of the few suppliers in South Africa, there's a shortage of copper because South Africa is importing. And if they don't have to import, and we're one of the few players that can supply that copper, then there's not a shortage. So from that perspective, I see a shortage in South Africa, in our domestic area. And in the medium to long term, the forecast is that there's a significant shortfall coming. And again, Martin, the other point I want to make is that copper is an interesting metal because it carries electricity. So, you know, today nickel is the darling child of batteries. Tomorrow it's iron, then it's lithium. Despite all of those things changing the whole time, the one element that never changes is the fact that you need copper wire to transport electric current. And therefore, copper just becomes more and more important, you know. And then on top of that, the infrastructure that's being developed, you know, that new city that's being developed in the Middle East, you can imagine how much copper that's going to need. So in terms of us to create a world that is a world where we will still be around in another 200 or 300 years, we need to have copper, and there just isn't enough copper.
So finally, Jan, what in your view should be the biggest takeaway from this interview?
Martin, I think the fact that South Africa's got a new copper kid on the block, we're going to grow into a significant copper giant. In the next 3 years, if you want to see significant return, invest in Copper 360, because we've got the copper market cornered in South Africa.
That was Creamer Media speaking to Jan Nelson, the CEO of Copper 360, for Mining Weekly's Listing of the Year feature.